For 30 years, one of the world's biggest economies was basically frozen in time. So what happens when that ice finally cracks? Well, today we are diving deep into Japan's Great Awakening. It is a massive gamble, and it's already sending shockwaves from Tokyo all the way to New York. And trust me, this isn't just some dry economic story. This is a thriller.
Just try to imagine an entire economy in suspended animation. That was Japan. For a whole generation. You might have heard the term Japanification. It was basically a world where everything just got stuck. Prices didn't go up, they actually went down. Wages didn't grow, they just flatlined. It was this bizarre, twilight world of stability, sure, but it was the stability of a coma, not the stability of good health.
So what do? Well, they tried this really radical prescription to shock the system back to life, negative interest rates. The idea was, make it so painful to save money that people and companies would have no choice but to spend it. But the patient just didn't respond. For years, that deflationary mindset was just too deeply ingrained.
And then, in December of 2025, the ice didn't just crack, it completely shattered. The Bank of Japan did what everyone thought was unthinkable. They hiked their main interest rate to a level that hadn't been seen in a generation. Now, this wasn't just some minor policy tweak. This was a revolution. And to really get why, we need to rewind and look at how Japan got frozen in the first place.
Look, what we're talking about here is a nation actively choosing pain over paralysis. For decades, Japan kinda opted for this comfortable numbness. Now it's embracing the full chaos of a living, breathing, volatile economy. And believe me, the consequences are going to be felt by everyone.
Okay, so to understand this earthquake, we first need to map out the fault lines. And to do that, we have to go back in time, back to the so-called lost decades, the long, cold winter that really shaped modern Japan.
You have to understand, this wasn't just about numbers on a spreadsheet. This was a deep national trauma. See, after a gigantic bubble burst back in the 90s, everyone, from huge corporations down to regular families, was absolutely terrified of debt. This created this powerful psychological trap. Think about it. Why would you buy a car today if you're convinced it's going to be cheaper next month? That one simple question paralyzed the entire economy for a generation.
So the Bank of Japan basically declared all-out war on deflation. I mean, they literally invented the playbook that every other central bank would copy after 2008. Zero interest rates? They did it first. Printing money to buy up assets? They pioneered it. They threw everything, the entire kitchen sink at this problem. But that deflationary beast, it just refused to die.
So you have to be asking, right? What was holding them back? Why couldn't they break free? Well, for the better part of 2 decades, the Bank of Japan was frozen, totally haunted by the ghosts of its own past.
Seriously, put yourself in their shoes for a second. Imagine you're the central banker. Twice you tried to do the right thing, to normalize rates. And twice, the entire global economy basically exploded right in your face. You'd be absolutely terrified of making that same mistake a third time. That's the institutional trauma that paralyzed the Bank of Japan. They were waiting for an undeniable, heaven-sent sign before they would ever dare to move again.
But by 2024, the whole world had changed. A whole series of massive global shocks. The pandemic, war in Europe, supply chains completely breaking down. They did what decades of Japan's own policies couldn't. They brought inflation roaring back to Japan. And with it, a whole new set of massive problems.
And just like that, the Bank of Japan was caught in a perfect storm. It was this triple whammy. First, inflation, which was just a distant memory, came roaring back and stayed there. Second, the yen went into a total freefall, which made everything imported way more expensive for everybody. And then the final domino fell. Wages actually started to rise.
And this is where the story gets really interesting. For decades, Japan's annual wage negotiations, they call it the Shunto, were pretty much just a formality. But in 2024 and 2025, everything was different. We are talking about the biggest pay raises in over 30 years. That 5.25% hike you see for 2025, that was the smoking gun. That was the undeniable proof Governor Ueda had been waiting for. Inflation was officially homegrown and here to stay.
But of course, this great awakening, it comes with a pretty hefty price tag. For every winner in this new economy, there's gonna be a loser. And this massive shift away from zero-cost money is about to create a whole new class of both.
For years, the Japanese economy was basically a low-budget zombie movie. You had thousands of companies that were, for all intents and purposes, dead. But they were kept shambling along by the life support of free money. These weren't just harmless, though. They were a huge drain on the system, sucking up workers and capital that could have gone to healthy, innovative companies.
Well, now that life support has been unplugged, and the zombie apocalypse has officially begun, just look at this. Bankruptcies are soaring to levels we haven't seen in more than a decade. Now, it's a really painful process, but a lot of economists call this creative destruction. The idea is you have to clear out the old and the dying to make room for the new and innovative. It's like weeding a garden.
And if you want a face for this trend, meet Royal Corporation. They were one of the first major casualties of this new era. They got caught in this classic pincer movement. The weak yen made all their imported clothes and shoes crazy expensive, and at the exact same time, the rate hike made their debt impossible to pay back. They went under in May 2025, and you can bet they will not be the last. But okay, the pain isn't just in the corporate world. It is hitting Japanese families right where they live, literally. And this is a wild statistic. A staggering 75% of Japanese homeowners have variable rate mortgages. For years, that was the smart move. Rates were basically zero. But now it's a ticking time bomb.
Let's make this real. Take a hypothetical family, the Tanakas. Their mortgage rate just jumped. That means the interest part of their payment has more than doubled. But here's the crazy part, and it's a real trap. Because of something called the 5-year rule, their actual monthly payment won't change for 5 years. It's supposed to protect them, but it means they're not paying down their actual loan. All that extra interest is just piling up, and in 5 years, bam, they could get hit with a payment shock they just can't afford.
So, as if a corporate bankruptcy wave and a looming housing crisis weren't enough to deal with, a massive political firestorm was brewing in Tokyo. And this is a classic story, a clash of wills between two of the most powerful people in Japan.
All right, into this chaos walks Sanae Takaichi, Japan's new Iron Lady. She is a political firebrand. She's got a reputation for getting exactly what she wants, and her economic plan, which people are calling Sanaenomics, is this potent cocktail of aggressive government spending and nationalist pride.
So, what does she think about raising interest rates? Well, during her campaign, she had just one word for it: stupid. Simple as that. She wants a weak yen and cheap money to fuel her economic ambitions, and she is not about to let the Independent Bank of Japan get in her way.
And this is where it gets kind of nuts. You have the government, led by Takaichi, flooring the gas pedal, pumping trillions into the economy. And at the exact same time, you have the central bank slamming on the brakes, trying to cool things down. They are driving the same car in completely opposite directions. I mean, what could possibly go wrong?
So it all came to a head in this tense, 25-minute showdown between the Prime Minister and the Governor of the Bank of Japan. And what came out of it? A bizarre, almost bewildering compromise. The bank gets to raise rates, just like it wanted, and the government gets to spend trillions of yen to try and offset the pain. It's a recipe for total chaos.
But this story doesn't end in Japan. Not even close. Because for years, Japan has been the secret, hidden fuel source for the entire global financial system. And now, that fuel is about to run dry.
Let me break this down, because it's super important. It's called the yen carry trade, and it's kind of the biggest open secret on Wall Street. Imagine you could borrow money for basically free, then turn around and invest it somewhere else that pays you 5% interest. It's a no-brainer, right? You do it all day long? Well, that's what huge investors have been doing with the Japanese yen for years, to the tune of trillions of dollars. Now here's the problem. That whole free money machine only works as long as Japanese interest rates are at zero. The second they start to rise, the whole trade goes into reverse. Suddenly, all those investors have to sell their US stocks, sell their other assets to buy back all the yen they borrowed. And that selling can trigger a massive global market meltdown. And we are not talking about small potatoes here. By some estimates, there's still $500 billion sloshing around in this carry trade. That is a gigantic wave of selling pressure just hanging over the market, waiting to be unleashed.
So you see the squeeze, right? As Japan's rates go up and US rates are expected to go down, that free profit disappears. The carry trade dies. And when it dies, all that money comes rushing back home to Japan. It's like someone just pulled the plug on a critical part of the global financial system, and frankly, nobody knows exactly what's going to happen next.
So after all this, what comes after the Great Awakening? Will Japan actually find a new path to prosperity, or is it going to be consumed by the very chaos it just unleashed?
Okay, first, let's tackle the elephant in the room. The one thing everybody thinks they know about Japan: its aging population. The conventional wisdom for years has been that it's a demographic death sentence. But what if I told you that Japan has a secret weapon in this fight?
Yeah, forget all the futuristic stories about cool robots taking care of the elderly. The real solution, the real future of Japan, is immigration. In this quiet revolution that's happening under the radar, Japan is slowly but surely opening its doors to the world, and it's changing the face of the nation forever.
And here's the real hope. For the first time in a generation, there's a genuine chance for the Japanese people to finally share in the nation's prosperity. If those big wage hikes we talked about actually stick, it could unleash a huge wave of consumer spending that could power the economy for years and years to come.
So let's step back. After all this, was it the right move? Was it worth it? The best answer is probably a resounding maybe. It was a dangerous necessity. The good news? The era of stagnation is finally over. The bad news? What comes next could be even scarier. In the end, it really all comes down to this one idea. Japan has made a choice. It has traded the comfortable, predictable numbness of stagnation for the sharp, unpredictable pains of a living, breathing economy. It's a dangerous new world, for sure, but at least it's a world that's alive.
The long winter is over. Spring has finally come to Japan. But what is it going to bring? A new renaissance of prosperity or a painful reckoning with the ghosts of the past? The only thing we know for sure is that the entire world will be watching to find out.